Welcome to today's live webinar entitled Job Costing Reporting and Cost to Complete, Critical Tools for Profitable Jobs. This webinar is brought to you by TAG. There will be a question and answer session at the conclusion of today's program. If you need operator assistance during the call, please press star then 0 on your touchtone phone. Please note that this conference is being recorded. At this time, I would like to turn the call over to your host, Olivia Romer. Please go ahead.
Hello, everyone. So today we're going to go over job cost reporting and cost to complete, critical tools for profitable jobs. So my name is Olivia Romer, and we are going to get started. So some of the problems that we encounter in construction when not having a good job costing tool is being able to track our budget versus our actual costs. So without being able to do that, we don't know how we're doing on our job really until the end of the job. Then we know whether or not we've been profitable. But by being able to enter in our budgets into our accounting software, we're able to see how our costs are aligning to those different budget items. And then we're really able to analyze those costs and see if we're making money in certain areas or if we are not making money. And if we're not making money, what can we do to mediate that in the future? Another thing is labor tracking. So right now, are you tracking your field labor if you're a construction company that's very labor intensive? Do you track the hours that it takes employees to do certain tasks, productivity rates, things of that nature? Are you looking at that information? Especially with labor-intensive contractors, this can be very valuable because most of your costs are going to be the labor, and therefore knowing your productivity rates can really help you understand whether or not your field operations is doing a good job or they need some assistance. And then next is just job costing. Making sure that your cost codes make sense for how you operate your jobs. So what I mean by that is, are your cost codes too detailed? This can be a problem, especially for some estimators. They would really like to see everything very, very detailed in the budget. However, you can't always get that level of detail from the field who's actually completing that work. So in order to get some accurate information that's actually going to be valuable in the future to use to help you estimate your jobs properly, you need to make sure that the cost codes make sense. One, that they're easy for your field operations to track, and that they actually provide you valuable information. So you don't want them to be too high level, and you also don't want them to be too detailed. You need them somewhere right in the middle. And that's something that you need to discuss internally to find out what that best practice is for your company. Okay, so you might ask yourself, is it time to switch to construction-specific accounting software? And usually you'll ask yourself this question if you can't really track job costs, if you can't track your budget versus actuals, and if you can't do any cost to complete. So one thing I always look at is if my budgets and my costs don't have any correlation. And the perfect example is the use of cost codes. If I can just put in a budget for the total amount of cost of my job and then put in my cost a total, again, I'm not saying if there's certain parts of the job I'm very good at or certain places where we need to improve. So by using cost codes and getting that better job cost reporting, we're able to manage our jobs better and possibly prevent any cost overruns that might happen in the future. Also, by using budgets, we can see if our hours, our labor hours, are consistently over budget. If they are, then it might be a time for analysis to figure out whether or not we need to maybe adjust our hours on our budgets, or maybe figure out why it's taking our employees longer than we think it should to complete certain tasks. Again, all these types of data cannot be collected or analyzed without a good construction-specific accounting software that can collect this data for us. Okay, so when tracking our job costs, we need to make sure that the cost that we're tracking is accurate. And the best way to do that is by tracking costs by job and cost code tracking. So cost codes, again, you have a variety of options when it comes to cost codes. Some people use BCSI cost codes. Others create their own cost codes. Again, it's really up to you what works best for your organization. But by using cost codes, again, you can really start to analyze things that become more valuable for making improvements to your operations overall. Next, you should have budget entry and tracking. So in these examples, I'm showing how I can enter in my budget by cost code and by cost type. So typically, you're looking at the 5 major ones: labor, materials, equipment, subcontractor, and other. But sometimes there's other cost components that you might want to look at in specific besides the typical 5. So maybe you have engineering costs that are a good part of your jobs. Again, these are things you want to think about on how you want to analyze those costs and how you want to separate your budgets. Also, too, when you're entering in your budgets, getting the reporting out of them is the best opportunity that you have, because now you can kind of see how you're doing on a particular line item or a particular cost code. And if you see things start going in a bad way, it gives you an opportunity to correct those, or it can help you identify things like change orders that might need to be collected. And that's something that we will discuss in a little bit. So change order management. Can your software enter in change orders that affect not only the contract side with your customer, but also on the budget side as well? So can you see how that change order is going to affect the cost on your overall job? And then job cost reporting in total is very important. So what types of reports do you have available? Are you doing a lot of this functionality in Excel spreadsheets, or is this something that you can extract directly from your accounting software? If you can get this information from your accounting software, that really is the best, because if you're transferring this information into Excel spreadsheets, there's a good chance for error, just because the nature of transferring information from one thing to another. It's just that human error factor. So by being able to extract this information directly from your accounting software, one, you're saving time, and two, you're getting that accurate information. So if you're not getting the information you need from your accounting program, then it's probably time for you to make a switch. So how do you enter and maintain accurate job costs? Well, the best way is in 3 specific sections. So that would be AP invoices, payroll, and subcontracts and purchase orders. So with accounts payable invoices, are you costing your accounts payable invoices correctly? So the best way to do that is you have a lot of options for different workflows. So perhaps the invoices go to a project manager or a superintendent for coding and approval, or maybe a project coordinator. There's a lot of opportunity to be able to make sure that things are coded correctly. Also, out there are a lot of document routing and approval softwares that can help automate the process for you. So as an invoice comes in, it can automatically route around based on rules that you create to the various individuals that need to code and approve this. Any way that you can make sure that things are coded properly help with the job cost analysis. So this is very important, is making sure things are coded properly. With payroll, you want to make sure that time is entered to the correct jobs and to the correct cost codes if you're using those. So a lot of times, sometimes the field, if they're entering in their own time, they're not as detailed as to what they're working on at that time. Maybe they just know it's this particular job. By having a foreman or a superintendent or a PM review that time, they're able to kind of give it a little bit more accuracy to make sure that things are coded to the correct job, to make sure that tasks are coded to the correct cost code. You also have a lot of timekeeping solutions that are available out there. And then a lot of them do connect with your accounting software. So again, one, it saves time because now your payroll person is not entering in this data from a time card, but it also helps with the accuracy because now your employees can pick the job from a correct job list and select the cost code from only the cost codes that are on the budget itself. So subcontracts and purchase orders, again, are another way to make sure that your job costs are accurate. So when you enter in subcontracts and purchase orders into your accounting software, they're doing two things. One, they're keeping you informed that you have a cost that you have committed to. So this cost is going to come in no matter what. Also, it's a good way for you to make sure, one, that you're not overbilled for the work that you agreed to, or in the case of a purchase order, that you're not being charged more on a price per unit basis for the materials that you've ordered. Okay. Also, too, when you're tracking these committed costs, you can see how much you've completed on that particular subcontract or purchase order agreement, and it gives you a little bit more perspective on what's going on in the job. A lot of softwares will allow you to customize the subcontract and purchase order agreements within your software. So you could actually take your existing document that you have right now that maybe you're using in Word or Excel and put it so that it prints directly out of your accounting software. Again, eliminating that dual entry for you. Okay, so budget versus actuals. So when you're looking at these types of reports, these can be very valuable operations tools. So a budget versus actual report should really have a few different components. So it should have your original budget plus any approved change orders. Now, sometimes individuals would like to see pending change orders as well, especially if they've already completed that work. And that might be how you want to look at that information, and that is possible in some. So what you want to do is make sure that you have locked down your original budget and prevented it from being changed in the future. Because what can happen is if you keep changing your original budget, then you really never knew how you originally did the job versus how the job ended when completed, right? So if that original budget is locked down from the beginning and the only changes that are made are those through change orders, then you can accurately see how you are doing on that job and determine whether or not the estimate on that job was accurate and how well your staff is doing as far as operations goes. Also, too, another thing you need to make sure of is that all your change orders are up to date and current. Okay? A lot of times what I see is individuals are going over budget on line items, and the reason for this is because they don't have change orders entered for whatever reason. And this can give you an inaccurate picture of what's going on in your job. And unless you know about that change order, you're not going to know the reason why the job is potentially going over budget, and that there is actually a change order that would need to be collected on that. Again, you need to have all your costs to date, and like we discussed previously, it needs to be accurate, or as accurate as you can get it as possible, all that cost information. And make sure that it's up to date. Don't have invoices just sitting around on people's desks waiting for approval. These items need to be entered regularly, so that way they present the most current picture of what's going on a project. Entering all your committed costs, so subcontracts and purchase orders. In this example here, what my report is showing me is not the full commitment, but what's left on the commitment. So in my cost to date column, part of those costs to date include commitments that have been previously billed already. So what I'm seeing in these two columns is what's left on those commitments. Again, this is giving me a more accurate picture of what's going to happen with my job at completion. And then analyzing my remaining budget. Do I have enough money on each of those respective cost codes to be able to complete the work that I'm assigned to do or that I'm contracted to do? Okay. Another valuable tool that we're going to discuss in just a few is how you can use this information to create a cost to complete report that will really give you a true analysis of what's going on as your job is in progress and predict how that job might end. So cost to complete. Cost to complete is a wonderful tool that some accounting softwares offer. If you don't have an accounting software that offers it, it's okay. You can also use Microsoft Excel to achieve the same result. It just takes a little bit more work. So again, the key components would be entering in the most current budget. Again, this is the original budget plus any approved change orders. You need to make sure your costs are up to date. So all payroll's been entered, all accounts payable invoices have been entered, and everything is coded as accurately as possible. And then this is where the tool gets really valuable, because you want to start having your field personnel involved. Have them analyze this report and see whether it's entering in the cost they think they need to complete the item or the percentage that they actually are complete. So as you can see here, I have entered in the percentage that I am complete on each of the cost code line items. And then based on that information, it has calculated the costs that I need to complete those items. And then it's going to show me my over and under budget information. Okay? And that is here. So now, with that information, I can start reviewing my budget overruns, or maybe I'm under budget on certain line items. Okay? So without getting the field involved, it's hard for the office staff to be able to know exactly what's going on a project. You really need the field to be involved because they know, they're there every day. They know what's going on the job. They know if there's certain situations that might have affected certain line items. And this is a great time to be able to have that sort of discussion with individuals. Why is a line item over budget? Is it because we haven't received change orders for work that we've performed? Or why are we under budget? Did we do really well on a certain line item? Or does it look that way and it's really a case of where we're not performing a certain scope of work and that really needs to be removed from our budget? So these are some of the questions that come up during the review of a CosttoComplete report that can really be valuable to us on whether or not our jobs are going to be profitable in the future. So here I've also shown an example of a Microsoft Excel version of the CosttoComplete. Again, it has the same information. It's just in Excel. This one also has a section available for comments. So maybe the PMs or superintendents can, explain maybe what's going on a particular cost code line item. So again, you have a lot of flexibility when it comes to these CosttoComplete worksheets, and they can provide valuable insight, especially when a job is in progress. So the next thing I want to discuss is your work in progress schedule and how that can be used as an operations tool. So some of the main things that I use the WIPP schedule for is to keep track of profit trends, look at team performance, and to keep an eye on my backlog. Also, over and under billing analysis tell you the true story of a job's progression. And when you're going through your work in progress schedule, make sure you get your operations team involved. By them understanding the job cost reporting better, it leads to improved performance in the future from your operations team, because now they know what they're looking at, and now they can better understand and identify potential problems that they might need to address. So there's 4 key components of your work in progress schedule. So the first is your revised contract. So again, this is your contract with your customer plus any approved change orders, as well as your revised budget. Again, original plus any approved change orders. It needs to have your current job-to-date billings. So again, just like with the cost, we need to make sure that all of our billings have been entered. Otherwise, we're not going to get an accurate picture of how this job is doing. And we need to enter in our job-to-date costs. Okay, so the first component, which is our total contract, we need to make sure that it is the revised contract. So it's going to include all those approved change orders. It can also include any potential pending change orders, especially if the work has already been completed, right? How much you actually recognize of that pending change order is something you need to discuss internally, because there still is the opportunity that you might not receive that change order as an approved change order. But based on the customer and the experience that you've had with them in the past, you would best know how to analyze it. If this is a customer that you work with regularly and you've never had any issues with them rejecting change orders, then it's probably fine for you to recognize that full pending change order. But if it's maybe someone you don't really work with regularly and you're not quite sure what that experience is going to be like working with that customer, then maybe you only want to recognize half of that change order. Again, this is something that internally you have to determine to best accurately show how your job is going to end up profit-wise. And you need to make sure to check this information monthly for accuracy, okay? The contract amount could constantly be changing with change orders. So we want to make sure when we're creating our work in progress schedule that we have the most current and up-to-date contract information. Okay, next, our revised budget. Again, I probably sound like a broken record, but we need to include all the approved change orders. And we might want to include any pending change orders for work that we've already completed, right? Especially on the budget side. If we've completed that work, we need to include that pending change orders budget cost because that work has been completed. Whether or not we actually receive the money on that is potentially still open, right? But we did complete that work, so our budget should reflect the cost for that work that has been completed. And again, on a monthly basis, we need to analyze this and make sure that the information presented in this column is accurate and up to date. Okay, the next component is our job-to-date billings. So we want to make sure that all billings have been entered and they are current. We should review our percentage of completion on a contract, okay? Does that sound in line, right? Am I billed 50% of the contract, but I'm 85% complete with the job? That could be a red flag right away of a potential problem, right? Maybe I don't have a billing entered. Or maybe a customer hasn't allowed me to bill for work that's been completed. Without having this information accurate, I won't be able to identify these potential problems or potential issues. My job-to-date costs. So making sure all my costs are entered and they are current. And I need to accrue for any costs on items that I might have already billed for. So potentially I've billed for a large chunk of materials, but I haven't received the invoice yet from my supplier for those materials. That can really skew how my job looks on the WIPP schedule. So I need to make sure that I'm accruing for any of those large item costs that I know I've already billed for, but I haven't received that information for. And like always, we need to just check monthly that the information that we're entering in here is accurate. Okay, so now how do you analyze your WIPP schedule? So there's a couple items that I really recommend focusing on. It's reviewing your underbillings, reviewing your overbillings, reviewing your profit and seeing if there's any profit fade or any profit gain as well. So in this example, I've shown all of those different areas. This particular WIPP schedule that I've done shows me not only the fiscal year to date, but it also shows me the current month's activity. So as you can see on one job, my profit went down 1.2% from the previous month to the current month. Okay, so these are some of the things that you can analyze and figure out what might have happened on this particular project. Why did revenue go down on this particular project? So first off, cost in excess of billings. So that would be my underbilled amounts. So I'm really going to focus on the ones that are large. So in this case, I have quite a few large underbillings. Now, a lot of contractors tell me, oh, you know what, Olivia, I love underbillings because they just increase my profit and I look so much better on my financial statements. Well, that is true. However, underbillings really aren't a good thing because what's happening with an underbilling is you are financing that job for that customer, right? You're using your money to pay for all the costs and waiting for them to pay you back, right? So it's better to have a good balance between your over and under billings. Under billings can also warn you of potential problems. One, it could be you haven't billed on the job, so it truly is underbilled, right? So why wasn't the project billed this month or this quarter or whatever it might be? Okay, or was it submitted late and therefore we weren't able to bill? Did the customer reject our billing? You know, what is the reason why we don't have the billing this month? It can also identify if a job has a cost overrun. So if I have a huge overbilling, it could potentially be telling me that my budget is not accurate and that my costs are going to be over what I initially thought they were going to be to complete this project. It could also be unapproved change orders, right? So here I've done work for change orders, but work's complete, but I haven't received that approved change order. So I'm not recognizing that revenue side of that change order. So this is a good opportunity for me to have a discussion with my operations team and making sure that we're trying to collect on these change orders where we've completed the work, right? We've done the work. So why aren't we collecting these change orders on our contract? These are just some of the few things that I look at to really identify what's going on a job and why it truly is underbilled. Okay, the next one is overbillings. So I personally like overbillings because then I'm using the customer's money to finance their project, right? But overbillings can be a tricky item, right? Because you need to make sure that, yes, you're getting that money advanced, but that you're keeping that money to use for future costs, okay? You're not just taking that money and then spending it elsewhere. And that's something that you need to be careful of. So a couple things that I analyze when I'm looking at overbillings is it truly an overbilling, right? So perhaps you are overbilled because you've really front-end loaded your schedule of values on your billings, right? You've got all your profit in the beginning line item and less in the later line item. I love that. I love front-end loading of your schedule of values. That's a great way for you to get that money up front and use it for the duration of the job. So is that happening? Is that why you're overbilled? Potentially you're overbilled because you have costs that have not come in, yet you've billed for those costs, right? So if your accounts payable is not up to date, if payroll hasn't been entered, you can get this missed information of an overbilling that truly isn't an overbilling, right? I mean, it is, but it's not because those costs just have not come in yet or have not been recognized within your software. So that's something that I look at too. Also, too, billing on change orders that have not been completed yet. That could also cause an overbilling. And then typically the last item would be, hey, I'm under budget, and I have not adjusted my budget for the fact that I'm just really doing a great job on this particular project, and I'm going to come in under budget on maybe a few line items or many line items. Okay. By getting your operations team involved, you can have a better understanding of what's going on in the project and to be able to identify these two items more clearly. What's creating these overbillings? What's creating these underbillings? Also, too, by doing this research before you meet with your operations team, it eliminates the chance for excuses, right? A lot of times when people aren't doing well, they've got a million excuses why they're not doing well, or they try to change the conversation into something that's not going to happen. There's many times as a controller that I've had experiences with my project managers that I see that a job is definitely going to be over budget, and I hear typically the same type of excuses. oh, well, I'm going to get change order for this other stuff, and that change order is going to cover this cost overrun on this particular line item. Okay, that's possible. That definitely is a possibility, but is that truly going to happen? So these are sometimes the hard conversations we need to have internally to be able to find out truly how a job is going to end up in profitability. Okay, reviewing our profit, fade, and loss. I like this particular WIPP because it shows me the fiscal year and the current month profitability. Okay, so I can see if a job is going up or down profitability-wise. You could also add maybe even quarter-to-date information. It's really up to you how you best want to analyze this. So I look and see if there's huge swings from one year to another or for one quarter to another. Was a job making, 25% gross profit and then boom, it went down to 15? Well, what happened there? Why did that lose, 10% in profit margin? What was the cause of that? So these are the types of things that I would analyze and ask the questions on, especially when you're trying to get any bonding. Your bonding company is going to look at your work in progress schedule very detailed, and they're going to try to determine if there's profit fade, how much profit fade there is, and if it changed drastically from one period to the next. And that's something that we want to eliminate, right? We don't want these huge peaks and valleys. We want everything to be a little bit more of like rolling hills, right? We want to kind of identify things as the job is progressing, if it's going to be under budget or over budget. We want to identify those things as early as possible and adjust accordingly so that, again, we have those rolling hills with our jobs instead of those mountains and valleys. Okay, so operations tools that you can use on your WIPP schedule is those profit trends. So you can see where your profit gains are, if you had profit erosion, if there's been a drastic change up or down, what you can do to prevent that occurring in the future, right? Team performance. You can sort your WIPP schedule by the PM, by the superintendent, by the estimator on the job, and see, okay, how does this PM or estimator do? Are their jobs profitable? Are they consistently over budget? Are they consistently under budget, right? These are some of the things that you can see. If you're looking at a job-by-job basis, sometimes you can't really see the big picture on how an individual is doing as a whole, right? So by sorting the WIPP schedule by these different individuals, you can really see how they're doing with all their jobs, not with a select few. What I see happen a lot of the times is a job goes south, and so therefore a PM or a superintendent no longer focuses on that job because now it's over budget and tries really hard to focus on their other jobs to make sure those are under budget. Well, really, when a job is over budget, that's the time you really want to focus on it to make sure that you're not losing any additional money, right? That's when you really want to watch that. You're not going to be able to really identify these trends unless you look at that PM or super estimator as a whole and against their peers, right? So if you see a PM who's consistently making higher profit margins than the rest of the PMs, why is that happening? What's going on? What are they doing differently? These are the questions you need to ask so you can make better business decisions. Also, too, the WIPP can be used to help with keeping track of your backlog. So let me go back to that previous slide here. So if you notice here, next to the billing and excess column, there is a revenue backlog and a profit backlog. So I can see how much revenue I have for the future. By keeping an eye on this, I can decide whether or not it's time to maybe be a little bit more aggressive to get more jobs, or maybe I don't have to be aggressive because I've got plenty of work in the future, so maybe I don't have to, you know, be as competitive with my pricing to get new work, right? Because maybe I don't need it yet. So by being able to analyze that backlog, I kind of know with my estimating team whether I need to be aggressive or not to get work for the future. All right. So now I'm going to open it up for any questions.
Thank you. We will now take questions. You may type your question in the question box in the presentation tab, or you can press star then the 1 key on your touchtone phone to be placed into a queue. If your question has been answered or you wish to remove yourself from the queue, press the pound key. There are no questions over the phone at this time. Are there any web questions? Ms. Romer, do you have any web questions?
No, I do not. I don't see any here.
Okay. Do you have any final remarks or key information that you'd like to reiterate for everybody?
Oh, okay. Here's a question that's come in. So how do you track allowances? So maybe you could clarify that question just a little bit. What types of allowances are you asking about, Robertson? Robertson, are you there? Okay. I'll wait. Which software is the best? There's a lot of different softwares that are available to you. The Sage software products are the most widely used in the construction industry, whether it's Sage 300, which used to be called Timberline, or Sage 100, used to be called Master Builder. Those are great tools. There's many that are out there. So I would just find a software that's construction specific because it's going to help with your needs, and the one that best suits your organization and how you analyze. Okay. Okay. So Robertson says, how do you track allowances? And he's talking about allowance to the budget to like supply and install tile. So, so the best way to kind of keep track of that information is it's really kind of be more of a little bit of, well, let me rephrase that. It could be a manual process or not. So a lot of times for those allowances, right, it's, hey, this is the price if we purchase and install, and this is the price if we just install it and you purchase the materials yourself, right? So, so really the best way to handle that is by entering in change orders to kind of account for those overages or decreases in the scope of work. I mean, that's really the best way to kind of handle that. Okay, let me see here. What else do we got? Okay, email information. You know what? I did not have it on my slide here, But you can email me at any time if you have any questions at olivia.romer@teamtag.net. So that's olivia.romer, ROEMER, @teamtag.net. And I'd be happy to answer any questions you might have. Okay, what's the differences between 100 and 300? Really, they all have the same basic features and functionality. Some of the differences, well, one of the biggest differences is 300 has a little bit more capability for customization. So customizing the way your job numbers appear, your cost codes. It has a lot of opportunity for analyzing by departments and locations, running your financial statements that way. And it has more functionality in regards to intercompany transactions. So if your company has a lot of other related entities where there's a lot of intercompany transactions going back and forth, 300 might be a good solution for you. So a lot of times what I'll see is construction companies that are maybe very equipment heavy. So they might have another legal entity that kind of rents out that equipment to the construction business. And so there's a lot of back and forth as far as transactions go between those entities. And so in that case, 300 might be a better fit. That way you could run consolidated financial statements and take care of those intercompany transactions with more ease. All right. I think I got all the questions. If I did miss a question, please, again, feel free to email me. I'd be happy to help you with any questions that you have. You know, I have many years of experience in the construction industry, and I've been using construction software for many, many years. At TAG, we help construction companies find the best software solutions for them. And I use my practical experience as a controller to help people, one, find the best software, and two, implement that software for their organization. So we'll just wait here a few more seconds to see if there's any more questions.
There are no questions over the phone.
Okay, great. Well, thank you, everyone, for attending today. I hope you found some valuable information that you can use in your organization. And again, I want to thank everyone.
This concludes today's call. For more information on TAG, please call 888-TEAM-TAG or visit teamtag.net. This concludes today's live webinar. Thank you for your participation. You may now disconnect.